let us now begin the conclave of today. And let me bring in the first set of speakers. So while we bring them on the stage, can we have their slide on for the introduction? The session topic is Big Budget 2021, Turning Expectations into Reality, a very hot topic of today's times. The session will be chaired by Mr. Anuj Puri, Chairman, Anarock Group. Anuj Puri has over 30 years of experience in Indian and global real estate markets and is a trusted advisor to developers, occupiers, investors, and the government. Anuj is widely acknowledged with revolutionizing the sector with his visionary outlook and technology-based in solutions. Now, let me also introduce our speakers of the session in an alphabetical order. Joining us is Mr. Ambar Maheshwari, Chief Executive Officer, Indiabulls Asset Management Company Limited. Ambar looks after the private equity business with a focus on real estate. A chartered accountant, Ambar brings with him substantial deal-making and structuring experience in the real estate sector. With an overall experience of over 20 years in India and Australia, Ambar has been focusing on the real estate sector for the last 10 years. Our next panel member is Mr. Amit Bhagat, CEO and Managing Director, ASK Property Investment Advisors. Amit Bhagat joined ASK in 2008 and co-founded the real estate fund practice of ASK Group. He manages and advises over 50 billion of real estate investments. He is a chartered accountant and has over 27 years of experience in mortgage finance and financial services. Our next panel member, Mr. Atul Goel, unfortunately, he is having a technical problem with the internet, so we hope he will be joining us a little later in the panel. But let me introduce our next panel member, Mr. Jayesh, partner BSR and Associates. Jayesh advises on various taxation and regulatory matters to multinationals and large corporations. He also heads the real estate and construction practice across service lines on all India basis. Our next panel member, Saket, Managing Director, Merlin Group of Companies. Mr. Saket has been in the real estate industry for nearly a decade. He is actively involved in formulating key decisions and policies of the company. Under the leadership of Mr. Mohta, Merlin Group has executed over 10 million square feet of construction covering residential, commercial, including IT buildings, industrial estate, and hospitality across Kolkata, Raipur, Ahmedabad, Chennai, and Pune. And our final panel member, let me welcome Ms. Shweta Shalini, BJP spokesperson, advisor to former Chief Minister of Maharashtra and former Executive Director, Maharashtra Village Social Transformation Foundation. Ms. Shweta Shalini works closely with former Maharashtra Chief Minister Devendra Fadnavis as an advisor, election strategist, and technology consultant. She has worked towards rural transformation in 1,000 backward villages in Maharashtra. She is a serial entrepreneur and founder, investor, and mentor to Millennium Divas, a woman-focused angel fund. She is also advisor to Niti Aayog, the premier think tank of Government of India. So this was our eminent panel. Can we have them on the screen now? Good afternoon, Ambar. Thanks for being here with us today. Hi. Ms. Shweta Shalini, always a pleasure to have you on the panel and to hear your thoughts. Jayesh, thank you for being here with us.
Thank you very much. Namaste, Sapna ji.
Namaste, Jayesh ji. Mr. Amit Bhagat, thank you so much for being here with us and being part of this panel.
Hey, hi, Amit. How are you?
All well, all well. Thank you. Thank you for this. I am
ever charming Amber. That's the good part of Amber to attract investments, right, Amber?
Good to see you too, Jayesh. Thank you.
Yeah, thanks to Sapna for bringing all of us together.
Yes, hi, Amit.
Yes, sir.
All well, Amber.
Good.
So, hi everyone. Namaskar. I think apart from the moderator, almost everyone is there in the panel.
Yes, we are waiting for the youngest member of the panel and the most experienced member of the panel.
Fully agree.
The Sachin Tendulkar, the Sehwags, right, of the real estate.
Correct.
You bet.
We call it even a Dada of the real estate.
There we have the man of the hour, Mr. Anuj
Arey,
Puri.
Sapna, how are you?
I
Look
am
at
good. Thank you so much for
Mr.
being here.
Arey, you brought so eminent panelists that I had to come in. Look
Yes,
at
the panel. The
Mr.
topic would
Bhagat.
not have been complete without you, Mr. Puri.
And Mr. Bhagat, just you take out as much money from his pocket, and yet his pockets are full.
ये 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 वो वाली बात है कि ये वो वाली बात है कि सूरज को दिया दिखा रहे हैं हम लोग। वो है
क्या बात है। I think सही बताया आपने।
सही है ना? Miss Shalini, how are you?
I'm good, Anuj. How are you?
I'm very well. Sorry, all these guys are very not very nice guys.
So I only want the moderator to be nice. I think these panelists could be good or bad.
Well said.
The moderator needs to be nice.
Very well said. Very well said.
Thank you, Anuj. Thank you
So,
very
Mr.
much.
Puri, over to you. Over to you to take ahead the conversation. Saket is joining in a few minutes.
Sapna, you're going to do the introduction?
We have already done the introductions. You can carry forward with the conversation.
Okay, 1 hour.
Yes. Please go ahead.
Hi, very good afternoon. Very delighted to have eminent panelists this afternoon. We will discuss Big Budget 2021. Is this a turning point for the realty sector? And I couldn't have thought of any other appropriate description of what has happened in the last couple of quarters. And clearly, after the budget, the way that the market has really opened up, both on the stock market and on the real estate. It has absolutely been contrary to what we had all thought at the beginning of the pandemic. The way the economy has come back, truly a V-shaped recovery, the way that we've seen the tax collections that have happened, the FDI inflows that have happened both on the real estate and the non-real estate side. And clearly it is being very well reflected in the stock market. So we're going to discuss a lot of this, and in more particular on the real estate sector with Ms. Shweta, Shalini, Ambar, Maheshwari, Jayesh, Kariya, and Mr. Amit, Bhagat, all representing different facets of the industry. Ambar, if I can start with you, just a quick couple of things. Interesting times, and Ambar, I'm going to start a little bit on the office side with you. Really, 3 questions I want to ask. We've also got Saket. How are you?
Hello, Anuj. How are you? I'm very well. Can you hear me?
Yes. We can hear you very well. So right. Saket is the champion of Calcutta. I think amongst the few very well reputed developers of Calcutta. Saket.
Thank you so much for the kind words. Thank you so much for the kind words.
Thank you. So we're just starting, Saket. Amber, 2-3 things. One is this work from home, and how is this going to stack up? And if this work from home, and we hear that it is going to be there for even after the pandemic, is there a possibility this will start to negatively impact the physical infrastructure, i.e., the demand for office space, even after the vaccine and the pandemic has gone by? And the second one is, Amber, what happens to the REITs? Because if there is going to be a negative impact on the demand for office space, given the habits of people may have permanently got changed, if that's the case, then does that have an adverse impact on the REITs?
So yeah, thanks. things. I think the work from home situation will impact the office sector initially. In the beginning, absolutely. I think there is a consensus among market participants that 10 to 15% of office demand is likely to be permanently lost. But I mean, if you look at, on an average for the last 5 to 6 years, 5 to 7 years, India has leased out approximately 40 million square feet of net office space per annum, right? And if 10 to 15% loses out from here, we are still at a very high 32 million square feet, right? Which is not at all bad to begin with. And what
Very
helps
good
is
point.
that the supply has been right? Supply has been limited, for a variety of reasons, not least because of the financial services sector problems and the challenges of construction finance and so on and so forth. So the supply of office space has been limited. And therefore, even though the demand initially will go down, will not have such a big impact, in my opinion, number one. Number two, I think, if you actually drill it down a little deeper, and I would characterize office space into city center office space and peripheral IT type office space. Uh, IT sector has been used to working from home for the last 10, 12 years now. Everybody in the IT sector, whether it is Bangalore, Hyderabad, Chennai, Pune, you know, uh, a large number of IT employees, any which way used to go to office twice or thrice a week. They wouldn't go every day, right? A very large section of that population, which is why even during the pandemic, even during the whole amount of disruption that we've had, IT hasn't really fared badly. IT has actually benefited a whole lot more from pandemic for a variety of other reasons. But one of the factors was also that they have been used to working from home for a very, very long time. And that I don't think will impact the commercial sector in a negative way at all, right? And when you look at a city center type office space, so peripheral IT type office space, I don't think will get impacted significantly. We've already seen the impact of pandemic on the city center office space because of high rentals. A lot of people have vacated office spaces, renegotiated rentals, and so on and so forth. And that I think will continue till the time the vaccines are done and large section of population has been inoculated. But having said all that, I think the fact that office will now completely go away is something which I don't think anybody subscribes to that view. We can't, I mean, I'm working from home right now. I know you are in the office, but I can't wait to get back to a full-time office. I can't wait to, sort of interact with people and once or twice a week that all of us do go to office. It's a pleasure to, have some sense of normalcy all over again. And I think that will drive the office demand back again. And in a maybe 2 to 4 year time frame, even with this permanently lost demand that we're talking about, getting back to 40 million square feet is not going to be such a big challenge. So that's as far as the first part of the question is concerned. I think second, the impact that it will have on REITs. Fortunately, all the REITs that have come about in India have been fantastically managed. They are managed by global investors at the back end or the front end, and they have been very generous in terms of share data. And if you see, the REITs and the month-on-month collection of rentals that they've had has been upwards of 98, 99%. So they are pretty much collecting all the rentals. While the occupancy still continues to be low in all of these parks, but rentals are coming forth with a very, very comforting degree of regularity. Right. So from an expansion perspective, that is where the demand will be impacted. But someone who holds an office space which is contracted, whether through a lock-in, sorry, I'm seeing a little bit of this. Okay, I got now.
Yeah.
So whether it is through lock-in contracts or through lease contracts, the high security deposit and so forth, peripheral IT space, because the rentals are so low, even mathematically it does not make sense for tenants to vacate their office space. If you know that in a 2 to 3 year time frame, you're going to get back looking for office. Like the fit out cost that you've spent in a peripheral IT park, say 2,000 to 2,500 rupees per square foot. And if you're paying rental of anywhere between 40 to 60 rupees or 70 rupees per square foot, the time frame it'll take you to run through the entire fit out cost will be so high, that in the short term it does not make sense, even arithmetically, for you to vacate the office space. So the REITs will not be impacted that much, only because they hold this current stock of tenanted office space already. Any further expansion, yes, but
It'll get
you know,
impacted. Yeah. No, I agree
sorry.
with that. That's a very, very good point is that, we're saying is that the office demand is slow, but it's not gone forever. Second is on the REITs, very well managed. Rent collections, as you rightly said, has been very consistent. The only issue could be for the expansion. If these REITs are really looking at, and they're, because the demand is rather slow, so there could be some challenges that you could see if expansion space was to come in within those REITs.
Absolutely. That's pretty much in a nutshell. Yes.
Ms. Shalini, I was just reading the credentials that were written against your name as a panelist. BJP spokesperson, advisor to former Chief Minister of Maharashtra, former ex-director, Maharashtra Village Social Transformation Foundation. I'm like, we are honored to have you on our panel. Three, four things that I want to really say first, and then ask you one very pertinent point, ma'am. Is that real estate piggybacks on industry, on economy, really. I mean, if the economy industry does well, real estate, because of the virtue of the job employment that gets created, we guys do well. I thought the economy was going to be absolutely in doldrums when the pandemic hit, April, May. Some of the projections that came up from IMF, some of the leading bankers, it was very scary. And then as every quarter went by, it became big and better and nicer. And today, we are in this comforting position where amongst the largest economies of the world, we are the fastest growing. And, the thought is that we will be about 11.5 or 12% GDP growth next fiscal year. Most of Europe and US is going to be struggling to be able to reach low single digit, and we are going to be in double digit next year. So fantastic, scenario that the BJP government has been able to do it. My question is really twofold, ma'am. The first one is,
I was wondering if it was a compliment or a question. So good, now that the question comes.
No, what went right? What went right? And whatever went right, was it planned that it happened, or it was circumstantial that everything, the moon, star, earth, and the sun just came together in one go and everything went right?
No, so see, there are a couple of things that I want to talk about here. One is my own fundamental belief. My own fundamental belief is that Indians perform the best when they are in pressure. The risk-taking appetite of Indians are fantastic. I mean, we step up. If you actually look
Yes.
at the COVID crisis, I think nobody has handled it from congratulating and boasting about the government. I think it is the common.
Yeah, I can hear you, but I'm not able to hear what.
Who stepped up?
Jayesh, can you put yourself on mute?
Who stepped up and came to the rescue of fellow Indians as well. And we saw it happening, right? But coming back to your question, I think what went right is also the thought process of the current government. I always talk about, and we consider this entire budget as Atmanirbhar budget. We called it the Atmanirbhar budget. You know where this term Atmanirbhar comes from? It is more than just economy, right? Because Atmanirbhar is a mindset, it's a thought process. For years together, we have lived in something called as Atmaglani. We need to come out of that and say that yes, as Indians, the kind of opportunity that is in front of us is huge. And if we decide to make hay while the sun is shining, I think we are going to be the next superpower. So with that basic fundamental thought, we set out in the creation of the budget. So if you actually look at the budget, there is a thought process of creating a resilient economy, especially for the low income families, so that we can sustain the V graph that you've been talking about. And if there is going to be a V graph in the world, then it is going to be in India. Because if you actually look at it, why do we call it? You said what went right, what went wrong. So if I take the example of the budget, because that's what we are talking about. See, one of the fundamental thing across the globe, the thought process has been lend more, spend more. But India, always we thought save more. And that's why we never spent. This is the first time where we actually did not shy away from saying that, yes, we are in a fiscal deficit. Our fiscal deficit is 9%. We will bring it down. But that doesn't mean that my gross borrowing is going to come down. I will categorically bring it down till 2025. But right now, what I want to do is to spend more, because if I take out money from my pocket, I will create more jobs. And that's the reason why one of the fundamental things that you saw in the budget, and I very strongly say that it is the fundamental thought of the current government. You see extremely huge capex. In fact, we are planning a 5.5 lakh crores, which is, if you take in comparison to a 2012-13, it is 5 times more. So this shift of thought process is the shift of thought process of Atmanirbhar Bharat. And I feel that has been the fundamental thought. Also, if you actually look at a lot of economists, everyone said that the spend on infrastructure, I come from Maharashtra, and I'm extremely proud to say that we have a minister in the central government who is a Maharashtrian, who is our leader. And every time I meet Nitin Gadkari ji, I keep telling him that the future of India is going to remember you as Road Curry and not Gadkari. Right? So the fact is, economists around the globe went ahead to say that infrastructure spend has to be brought down because the economy is in doldrums. But nobody in this government shied to increase the infrastructure spend. In fact, for the first time, they have thought of a different plan. So for the first time, we are thinking of an SPV in the infrastructure sector to attract FDI. And I think that is the way forward, doing things differently. And that's precisely what this market needed at that point of time. Because I'm talking about in a real estate summit, I would want to talk about one of my favorite subjects, which is affordable renting. With Pradhan Mantri Awas Yojana, I've done a lot of Pradhan Mantri Awas Yojana, but I think affordable renting and the focus on affordable renting in this entire budget, I personally feel with 50% additional, FSI, 100% tax holiday, I feel there is 500% hope right there. So with this focus of increasing jobs, increasing the spend on infrastructure, increasing the capex in totality, and not shying away from lending, it has been the prime reason of why you are seeing a V-shaped, curve today in the economy. And I think we are in for some great news. We are going to, prove IMF wrong, and probably the rate may be better than what IMF is focusing on today.
And ma'am, a lot of people are saying that. A lot of the business community is saying exactly what you said in the last statement, that they believe is that we may just surprise ourselves. The way the platform after this budget so articulately being narrated by you has been set, that we may surprise ourselves to a 13-14% GDP growth. Instead of 11.5% GDP growth. And ma'am, you're so right. The way the initial estimates came in from many of these organizations on the decline in GDP was more like 18%, 20%. And as the quarters have gone back, we have demonstrated our strength, and today it looks like it's probably going to be -8 and not -18. Which was thought. I have one more question to you, ma'am, and it's an important question. A lot of things are going right. Is there anything that can derail us today?
So I don't think that So, for example, one of my another very favorite topic that I usually talk about, and I missed out here because this was an infrastructure thing, is the spent on health. Right, we have increased the spent on health to about 137%. But another favorite subject is the spent on sports infrastructure. So this time we could not spend on sports infrastructure. Now that is something that I feel has gone amiss. But if I put it in perspective, jaan hai to jahan hai. So the focus today is jaan, and perhaps 2 years from now, jahan will also come in, and that's why it has been it has just taken the back seat in the queue. I come from a startup world. I come from a tech world. So yes, coming from the startup world, I perhaps had a little more expectation from the budgets with respect to startups. So I would have loved if VC money would have gone tax-free. So yes, that was something that I was expecting. I still want Nirmala ji to actually have a look at that. I would have loved it if startups in India, be it infrastructure, be it real estate, be it tech, fintech, or prop tech, to be easily listed. A lot of these companies which are today defined by any kind of tech, whether it is fintech or prop tech, is I'm seeing getting listed on NASDAQ, but is not very easily getting listed here in India. So if that would have been focused, perhaps that would have been a little easier. For me, one of my personal drives is online education. I personally feel that work from home is here to stay. And because I come from a tech background, and digital is something which is very, very close to my heart, I thought GST on online education could have been brought down. So these are things which could have been done, and I can categorically say that these things I have slated in my mind, because I still have expectations from my own government saying that yes, these are things where we need to work on. Thankfully, this is a government that takes feedback and works on it on a continual basis, and I'm just hoping that things like this will come on the priority table sooner than the next 5 years.
Yeah, but this government has done a fantastic job. I mean, I must say is that it is the fastest growing economy in the world today, one of the largest, fastest growing economy in the world, and yeah, absolutely. I just hope that there is nothing that derails it from where we are, and hopefully this pandemic sort of settles and doesn't start showing its head again. Amit, I'm going to come to you. We heard Ms. Shweta Shalini speak about the budget. Two questions to you, Amit. On the real estate side particularly, we've seen a fair amount of debt that has come onto the real estate, but haven't seen any equity. Do you think anything could have been done in this budget to bring more equity into the real estate sector?
I think budget will not help. I think we as players have to come together to introspect whether we are ready to attract equity again. It's a wonderful counter-cyclical opportunity. We have seen how debt has virtually dried up in terms of financing, how NBFCs are managing their own balance sheet, most of them currently. And some of the wholesale lending institutions, and they are not very keen to lend to this sector. In fact, they are not able to meet their own commitment which they have sanctioned in the past. So when you give an opportunity to the offshore investor, where he has an equity-like return from the debt, he will not look at equity. And I think today. So once this situation in the last 2 years, what we have created, which is an asset liability mismatch, and how developers are struggling to complete money, to complete their projects, even the working capital is not available to them. And that working capital is being forced upon through the RBI regulation in terms of additional 20% lending given by banks and housing finance companies. And ultimately, 1st April, when the insolvency opens, if the financial closure of the project has not been done, we will land into three kind of projects. The first bucket, where the money has been diverted from the projects, and that money is not coming back.
Yeah.
Because it has gone stuck. So either insolvency or SARFAESI is the route. Insolvency will open from 1st April. SARFAESI, if you do it, and if it is a partly sold project, the lender is also taking the problem of the customer on his head. The second bucket is a bucket where money was not diverted, but the prices have corrected. There, the lender is willing to cooperate because the intent and the capability of the developer is not a question mark.
The only thing is on that point, Amit, on that point is the capability of the lender. So I know that the intent is not a problem on both sides. Capability of the developer is not a problem, but I hope there is capability of the lender.
So I think there is a very good saying which we have all been brought up with: a man is known by the company he keeps. So if you are dealt with lenders who have been not very prudent, and you have relied on a very high cost money which was not monitored, because at that point of time you loved that particular girlfriend who was taking you and paying for your entertainment also, then you have decided the course of action today, and you are going to pay a price for it. Had you gone with the dating intention of getting married to a partner with a long-term interest, you would not have landed in such a situation. I think I can only summarize that like that, but I can only say the kind of interest, because of the very quick recovery. And I think Shweta has covered most of the things on infrastructure, but infrastructure will lead to real estate growth.
Yeah.
Currently, there will be distressed players which will come in, and then obviously the lenders will become active, especially the AAA rated, because the current situation is that the spread between the single A rated developer and the AA and AAA has gone up actually. So, but gradually it will all revive. Lending opportunities are very limited today, and so banks will come back with recapitalization and privatization and everything. But equity is not, when this happens, equity will come back in a year or two. And if you ask me, if you play contrarian, this is the best time to do a counter-cyclical opportunity as an equity player. You will get assets through the insolvency and the SARFAESI route. So, but most of the players, and it is true in most of the markets, whether it is listed space or debt or real estate, we always have a herd mentality.
Yeah.
Very few people play contrarian. And those who will be contrarian will make most money.
Yeah, Amit, I agree, but it takes also steel of nerve, nerve of steels to be able to become contrarian. I know you have been contrarian for a very long time, but it does take a lot of courage when the market is thinking one thing and you're really investing in something else. So I do hope what you're saying is correct, is that in a year's time we start to see equity, particularly in the residential space, come up. Otherwise, it'll be difficult for the industry to bring in the oil that it requires for it to have a smooth functioning. Fortunately, as Amit, you said, and Shweta also said, is that the economy has come back and hence the demand has come back. Otherwise, we would have been in trouble, because through that you've had the sales happening, and through the sales, at least there is liquidity that has come in. The monetization of the assets has started to happen, and we'll discuss a little bit more of that with Saket, who's the only real estate developer on this panel. But before I come to you, Saket, I have two questions to Jayesh. Jayesh, are we starting to see global investors come into real estate?
Say it again, Anuj.
Are we starting to see global investors, international investors, wanting to put more money in Indian real estate?
Anuj, I think the data point itself has shown in the last 5 years that the global investors are, I would say, very much positive about investing into the Indian real estate, be it is a commercial real estate or be it is a residential real estate, right? And again, we have seen the transactions where there are significant investments that have been made, even in the affordable housing space also, where the investors are very, I would say, positive about it. And as Shalini mentioned that while there were a lot of expectations of, I would say, the real estate, so-called the real estate developers from the sector, from the budget to, I would say, revive the sector. But I would say a lot has been done by the government over a period of time in some or the other manner. So if you look at it, the changes that have been made in the financial regulations, the changes that have been made in the land acquisition regulations, the RERA that has been introduced, and a lot of confidence that has been brought both for the investors and also for the home buyers. And also I would say the repo rate, the changes, the reduction in the interest rate, and that has have, I would say, impacted or reduced positive impact in terms of reducing the interest rate for the home buyers, and also giving, I would say, the benefit on the taxation front. I think all these have, I would say, created a lot of positive impact. More importantly, I think this government has taken a bold step and I think not listened to, I would say, the global financial expert to say that we are going through the pandemic and therefore there is a need for India, which is again still a developing economy, to garner more funds and curtail the fiscal deficit. But I think the Indian government took a different route. And as you rightly said, that obviously we will also surprise ourselves through that, is laying down the foundation for the next, I would say, 1 decade in terms of, I would say, opening the economy for the global investors in the form of what we call it as allowing the REIT InvIT to borrow funds through a debt, the creation of the DFI, which is again a very bold initiative and to be run by professionals, setting up the ARC on the back of that IBC, not, I would say, giving the desired results, and then creating ARC, and also inviting, I would say, the professionals to run that ARC, which is again a very bold move, and I think that's going to create enhance the confidence of the investors. And a lot of, I would say, the announcements that have been made in the context of what we call it as the asset monetization, and even, I would say, release of the unused, unproductive land parcels, which are being held by various PSUs, whether large companies where the government has stakes. So all these things will, I would say, create not only the demand in terms of the real estate, whether it is commercial, whether it is logistics, whether it is on the education side, so there are different, I would say, the types of demands which will foster, which will come in the market over the next period of 5 years. And that itself, I think, will create or is creating a positive impact as far as the investors are concerned. And the success of the REIT has been, I think, one of the proof of the pudding that yes, it will succeed. While there are some, I would say, hiccups as far as the REIT InvITs are concerned, but I'm sure that the government is cognizant of that, and those, I would say, will be addressed by the government. So I see that this is a very good move that has happened. While the government has not met some of the expectations, but I feel that's the right approach. And I strongly believe that the budget should not be a kind of an event or a year-on-year expectation. So it is not that a Christmas and the Santa Claus comes every year with some gifts, and then people get disappointed. So I saw a lot of, I would say, after budget, a lot of negative. I would say the press media saying that government has nothing done on the real estate side. But if I look at the macro picture on the vision of the government of, I would say, building the India on the infrastructure side, opening the economy, creating a very robust, what do you call it, as the development financial institutions, the debt market, then also the gift city changes which have been introduced and inviting the investors to the gift city. So we are seeing a lot of traction in one of the gift city also for the investors to invest in the gift city in terms of the financial markets. So I think these are all very positive move, which will, I would say, give fillip to the real estate sector. So people should not think about small changes saying that the tax rate has not been reduced. In fact, people should be happy that the government has not brought out any new taxes. Right?
Exactly.
There are no estate duty. If you look at in the US, there are 40% estate duty on the real estate, which is not there. So I think people should be very happy. There is no inheritance. People should be very happy about it. And beyond a point, I think people have to understand that it's like the family, right? If you're in a family, a father or parents cannot keep every child happy, right? And has to map that which is the bright child and where to invest, where not to invest. So even in a family also, this kind of situation happens that a parent cannot, I would say, satisfy each and everybody. So similarly, I think the citizens or the entrepreneurs of this country has to understand that हमारा भी वक्त आएगा, right? So therefore, I think there has to be some patience, and we have to be thankful to the government that over the last, I would say, the 5 years, as I personally see, that the government has been not only hearing, but the government has been listening to the sector. Anuj, the government has been listening to the sector and taking the right measures step by step. And we can witness the, I would say, the reduction in the stamp duty from 6% in Maharashtra to 3%. And so that has created a huge wave, right, in terms of the supply. So these small changes also have impacted. But my only suggestions to the government is that now the time has come for the real estate sector that the government should give it an industry status. And as you rightly said, there is a lot of consolidation that is happening and going to happen. The professional culture is coming into this sector, and therefore the so-called, I would say, the what we call it as the taboo of what we call it as the real estate sector, which was there. I think that is slowly getting diluted, and therefore now the government needs to have to come out with a long-term plan rather than giving this short-term measures or short-term boost. Will, I think, make the sector more stronger, bolder, because it supports more than 300 sectors or the industry. So therefore, I think this is a very robust sector after the agricultural sector. So I strongly believe, and how always been, I would say, positive about the sector wherever I've spoken on the platform. People say that we are very optimistic about it, but I'm really optimistic, and the data itself suggests that yes, India is the sector or is the country where the real estate is going to grow from here onwards.
Yeah. So Saket, Jayesh mentioned about this apun ka time aayega. I am thinking, looking at Saket, he must be thinking, "Arey, apun ka time to aa gaya." Residential is in big favor. I mean, who would have thought, Saket, sitting in April, May, June, when it was the peak of the pandemic, that the sector was going to bounce back so beautifully. And then particularly for corporates like yourselves, Saket, mature corporates who are transparently, had financial governance, have delivered, have a great brand. And the way it has come back for the residential sector. So 2-3 questions, Saket, because you're the man on the ground. The first is, did you expect it to come back so quickly?
Honestly, Anuji, actually, we didn't really expect it to come back so quickly. We were all surmising whether it will be a a U-shaped recovery or a V-shaped recovery, but definitely, as Shweta ji pointed out and the other notable panelists pointed out, that it has been a V-shaped recovery, especially in the residential segment, and the recovery is already underway, and it's basically because home has, you see, been the most marketed commodity in the last year or so, because people have been caged in their houses, they've been staying in their houses, they realize the value of a house, they realize the value of spacious living, living in complexes with good amenities, with great specifications. So the people have come to the realization that home is of paramount importance, and this is what we are seeing in terms of sales. People are coming out to us. People who've been living in traditionally living in villas, or they've been living in their first homes. They're coming out. They're buying their second homes. They're moving to bigger spaces, bigger complexes. So yeah, we have seen an uptick in sales. I would say we have pretty much exceeded our pre-COVID levels, and we are
Wow.
very, yeah, and
And then,
we're happy to say that.
and then
Yeah.
Saket, where are the prices? Are they at the pre-COVID level? Have they come back to the pre-COVID level, or they're subdued, or they have crossed the pre-COVID level?
Anuji, actually, with the input credit going away, we are not getting the input credit that we earlier used to get in affordable housing. There is actually no scope of prices coming down anymore, especially in a market like Calcutta or even in Pune where I'm operating. We are operating in the affordable and premium segment, in which the construction costs have really come up. The input costs have gone up. The input credit is not being availed. So there is no scope of price going down. As far as price staying stable or going up is concerned, we are seeing that prices are matching the inflation increase, the uptick in inflation. The price is matching that, as well as we've been able to raise our prices in the last few months because of the great demand that we are seeing, especially in the affordable and in the premium segment. I would say we have increased our price of around 5% in all our
Wow.
in projects all across our board.
And then, Saket, you have a number of retail malls, and to my mind, one of the benchmarks of the economy coming back is when you actually start to see people coming out and shopping, or when you start to see people spending money. What is the status in your retail malls? How's the footfall and the consumption been?
Look, sir, when the pandemic started, we were much more concerned about retail than any other segment, because after all, it's a discretionary spending. It's not something which is a need of the hour. Like a house is a need of the hour, like roti, kapda, makan. Makan is something that is an essential. But discretionary spending like a mall or going to watch a movie or going to out to eat is something that we choose to do, which we can avoid as well. So definitely that was a cause of concern and is still a cause of concern. We had to talk to our retailers, had to have open-hearted conversations with them during the pandemic, and we had to give them the assurance that we were together in this and we were sailing in the same boat. And I'm operating three malls in Calcutta, and we are very happy to say that we have been able to retain at least all the retailers in our mall and not have them pack their bags and leave the mall. So that has been an achievement. But the rentals, I would say, I'm still discounting the rentals in both my malls, and the rentals I'm receiving maybe 75 or 70% of what it was pre-COVID, and understandably so. I'm not really pushing the
Understandable, sir.
retailers to give me the full rentals. But after the festive season, after Diwali and Durga Puja, which is a very big festival here, we are seeing that the footfall is gradually coming back, and
And
we are very happy,
Saket, what will be the
very happy
footfall
that the,
today? What will
sorry,
be the
sir.
footfall now? What will be the footfall now compared to
The
pre-COVID
footfall is,
levels?
sir, actually, after the government has allowed us to start multiplexes, and even the capacity of the multiplexes have been increased lately in the month of January. We are seeing that footfall is pretty much back to 80-90% of pre-COVID levels.
Very nice.
Yes.
Very nice.
So
Super.
thank you so much. So we are very grateful to the central government and the state government. They have also been very supportive to us in our ventures. In and we're happy to say that in the next few months, probably we will come back to the 100% rental stage that we were in.
Super. What we've heard till now is that we were scared about the situation, and I think with the help of the government and Shweta, you said beautifully, and I completely wholeheartedly agree with the first statement that you made, that Indians are very resilient. And you're absolutely right, Shweta, that we were amongst the first ones to have got out and said, look, we have to earn our livelihood. And most of the people got back to work. Many of the people whom we know in more mature markets, more sophisticated markets, more Western countries haven't really worked that hard just because their benefits were coming home and they didn't need to really work hard. And I do feel that this is where India will, in the geopolitical situation, take a much higher stand than where we were pre-COVID level. So it's been pretty good. I have about 10-15 minutes more. I want to start looking at the conversation going forward. So Amber, I'm going to start with you. So we fared well where we are today. I want to understand going forward, Amber, two things. One, do you think IPO market in India will open up? For the longest time, for 14, 15 years, the IPO for the real estate hasn't opened up. I think the last, and you don't know this, Amber, probably 2006, 7, something like that. We'd had. Where do you think that we have more possibility over the next 1 or 2 years now to look at the IPO for real estate?
Oh yes, absolutely, Anuj. I think we are in a bull run which has which has gone on for a bit and looks like it's going to go on for a long while. This looks like a sustainable rally, and I mean we've already got Lodha lined up for an IPO, and a few others, Puranik and all of that also are now lining up for IPOs and so forth. I think one of the key things that this pandemic has done is consolidated the industry in a manner where key developers, good brands, good governance, good product, good quality, all of that, as Amit was also saying, there has been a big differentiation that has been created with the good and the bad guys, right? And if it continues the way it does, then the good guys will have no dearth of raising capital from the IPO markets. Given the kind of momentum that we've seen, whether it's in terms of demand, whether it's in terms of activity on ground, real estate, residential particularly, is set to boom. I mean, low interest rates, liquidity galore at this point in time will likely to remain low for a long time. Even if inflation doesn't play spoil sport, obviously, that's a risk that we are running. If inflation, goes up, then I think interest rates will come down. That will be negative for the economy overall, rather than just the real estate. So I think given all of that and the kind of foreign investment that we've seen in real estate, where the sector is becoming far more organized, than it has been. IPO market, I mean, Brookfield was an IPO. Raheja Mindspace was an IPO. They did
And
manage to raise
both in
decent money.
pandemic. Both in
Yeah,
pandemic.
and I mean, Mindspace was at the peak of the pandemic, right? Office work from home, cloud hanging over you, and so forth. And then they go up and raise multiple times of what they set out to raise, both of them. You know, I think these are fantastic times. This is as good as it gets for people looking to raise money from IPO. I don't think it's likely to get. I mean, it couldn't be better.
Wow. Shweta, coming to you, what can we expect over the next couple of years from the government? What more can we expect over the next 2-3 years from the government?
So I think I'll change this question a little bit. I think what more do we expect from the entire ecosystem, the entire sector, because it forms the sector as well as the government. So one of the things that I'm sure, Anuji, you will also agree, and I'm quite scared about is the unsold inventories. I think there is so much unsold inventory in the market that it is important for consumption to actually happen. I completely agree when Jayesh ji says that this entire sector needs and industries status. I personally have been advocating the fact that it needs to be, the entire sector needs to be an asset class, at least for the minimum. And for it to be an asset class, we need to understand that the fundamental thought process that has to be brought on the table is to not hold inventories, but to sell. Because ultimately, if you actually look at the state of Maharashtra, I'm sitting in Mumbai. Uh, the stamp duty has been reduced from 6 to 3%, but has it been passed on to the consumer? It is slowly, the thought process of the government is to formulate every unorganized sector into an organized sector, because it is organization, systematic organization, which is going to find to become the fundamental of the superpower India. And I think the shoulders of this superpower is going to be the real estate structure and the infrastructure sector. And hence, we need to understand that to organize this sector, to create systems, and to create the right kind of structures, it is very, very important for us to have our fundamentals right. Second, I think everyone has spoken about REITs, and I think Amit ji really spoke about it at length. I see a lot of hope in REITs. I would expect a lot more implementive and legislative fundamental changes in REITs, so that it can attract a lot of FDI, especially for the affordable sector, because housing for all is going to be a reality. And also, I told you something which is very, very close to my heart is affordable renting. So I personally feel that we will see a lot of FDI flowing into India into affordable renting. And that's where I am going to peg my hopes. Only that the government needs to focus on the aspects of clarifying certain things within the REIT structure. Last but not the least, I think Ambarji talked about work from home. I see a lot of, I come from an IT sector, so right from work from home, there is a new concept called work from hometown. And that's what is WFH. So work from hometown is also going to be a fundamental thought process here on. And that's why I see a lot of smart cities and amruts and the fundamental thought process of the government to push in a lot of money around creating the tier 2 and the tier 3 cities, because I feel the relay is going to be there. It's no surprise that the Bhubaneswar's smart city is doing so much better than the Punes of the world, and much faster. It's because it is always easier on a cleaner slate to do things more systematically and structurally. Here in larger urban areas, it is a challenge to actually create a structure, because there is already an unorganized, unstructured manner of doing things. So it just helps the government to decide that creation of digital infrastructure, ensuring that work from home or work from hometown, both are fundamentally prioritized. And moving forward, smart and Amrut, I feel that a lot is going to be happening there. And housing for all, I think if we look at the consumer sentiments, I feel going closer to the native place and being closer to elders, ensuring the retirement space becomes my workspace is the thought of the new millennium after the COVID. And hence, I would sum it up by saying, one, change in the mindset of consumer is happening or has happened, and hence the developers have to change their mindset. They need to sell, they need to create products which can be sold, and ultimately there needs to be an action of selling that happens. I don't know why people hold inventories, and I've not really realized why, especially after an engine like Anarock's sitting right there. I don't know why people hold. We need people to sell for economy to start moving.
Saket, all these questions are coming to you. So you prepare yourself before that I'll go to Amit. All this, what Shweta said, is going to come to you. But Shweta, very good points that you've said is all these 3 points. One, hopefully we'll see more FDI. And you're absolutely right, the way REITs has come in, the way government has, the way SEBI has bought in. And I think Ambar said this is, it has got great sponsors. So, the SEBI is also put in the right, laws so that there are no unwarranted sponsors that come in and spoil the party. Second is this reverse migration. I completely agree with you. Tier 2, Tier 3 are going to flourish. And hopefully because they are cleaner cities, they are newer cities, the smart city concept, maybe they will do better than some of the older cities. And the third one, which we're going to come to Saket, is, Saket, how come this unsold inventory doesn't go down? And why do developers hold the selling in that? But before that, Amit, two questions to you. And I know we are like sort of 6 minutes away from closure. The first one is, are we out of the woods? And then really two parts. Are we out of the woods for the NBFCs? And are we out of the woods for the developers?
Let me take the second question first. I think for the developers, it is a consolidation of demand and consolidation of supply. The top 30, 40 developers, they are exactly following the US footsteps. The top 15 developers constitute 75% of the multifamily apartments. We will be the top 20 years, 10 listed and unlisted, will be 40% in the next 1 or 2 years.
Wow.
For those players, I can safely say they are out of the woods. Before this session, a developer from NCR came in to have lunch with me in Mumbai. And I don't want to take the name on this, but you know him very well. He's as good a friend of yours as mine. His sale is more than 1920. He's a tier 2, tier 3 developer with a listed company in his fold. And his profit has increased, his turnover has increased because he has done financial closure for each project. And he is actually one of the most prudent developer in the country. So people who are prudent, who have done financial closure of projects, who have not diverted money, who have been product centric and customer centricity, they are out of the woods as far as sales are concerned. As a private equity player, if I have, say, a dozen projects which are alive, it's not about boasting about our own business. One of our project we launched last week in Chennai, and we had to give a thank you ad after selling 100 apartments on day one. It reminded me of good old days. So we've never done it in the last 2-3 years. And the newspaper ad is there. It's run by a very large corporate who's our partner. So I'm saying for top 30 players, we are out of woods. And for balance 20, we'll be out of woods. But for others, we may never be out of woods. Coming to the NBFC space, I think the same situation. If you are AAA, if you have a retail portfolio, if you are de-risked, and you have not focused on wholesale lending only in real estate, you are out of woods. And the AA-rated companies are struggling because they have only done wholesale lending. And I have a very famous, because it is a repeat of after 20 years of NBFC crisis, it's a repeat of 97. And both of us were in business then. So we are aware of what happened. It's the same asset liability mismatch. And any and every arbitrage which you will focus on in life, no arbitrage is ever sustainable for life. So I think NBFCs have committed the classic case of trying to take advantage of an arbitrage when banks took a back seat and they are paying a price for it. So be it. Let them suffer and let the best man win in this journey.
Absolutely. I agree with that. Is both very clear points, Amit. For the developer, I think the good developers, perhaps it's out. The moderate developers in the next few months or maybe quarters will be out, and there'll be 50% of which perhaps will never be out. And likewise, on the
I just want to make one comment. It is, I think, the greed, which is, I think, has to be removed from the system across all the stakeholders. And I think if we are able to remove that and change the mindset on that front, I think things will be unimaginable for the sector. So what Amit talked about, like a real estate player or even for the NBFCs, I think it is the greed I think that has brought us to this situation.
Yeah, and just that leads me very nicely into your question is that where do you see our sector 5 years from today?
It's a very, very interesting question. If you see from a sector point of view, I would say from a fundamental point of view, I see that this sector can even surpass the agricultural sector. If I would say in terms of the contribution to the GDP of the country, if right things are done by all the stakeholders, not only the government. Okay, I think we do not expect too much from the government, but I think all the stakeholders which are involved in the government. So therefore, this sector has got phenomenal, I would say, the potential which has been untapped. But will this happen in this country over the next 5 years? And I really have my own doubts, and there are reasons behind it. So I'm not pessimistic about it, but I have my own doubts. The first doubt is I would say the way the constitution that we have and I would say the political system that we have, and the changes, I think, which is what we call it as a constant, right? And any economic system, when the changes are constant, that's what we are witnessing in the US also. So when we see that the changes are constant, especially on the policy side, and especially on the, I would say, the implementation side, so that puts a big question mark. While you may have very good intentions, very good, I would say, the projects, very good, I would say, the announcements and everything, but if those are not rightly being implemented, then I think that could put a big question mark. So therefore, I think the stability, consistency of the driver, it is very important. So therefore, I think we all need to. So if we have said that, I'm not talking about any particular party, whether it is BJP, Congress, whatever it may be, whichever that government comes into the center, I think we need to support that as citizens. We need to support that party who is, I would say, getting India to the next level, right? So that's one thing, and we are the one, I would say, as the citizens, can provide that stability to the government, and at the same time, that stability has to come from the government, whosoever is, and then provide, I would say, stability on that front. The second point is, I would say, there are too many, I would say, laws in India which needs to be, or even the, I would say, the ecosystem that needs to be changed radically and quickly. If that is not done, and again, then we just try to struggle to make small changes and make certain patches, I think it's not going to happen. So somewhere I think we'll have to break the taboo of bureaucracy. We'll have to have a CEO culture. We'll have to have that. And if we don't have that, then I think we don't see that as a superpower. We may call it, but we don't have. We have the potential. We have all the strength. But if we don't do it right, I think we'll have. And capital, I tell you, Anuj, is abundant within the system, and unbelievable capital that this country has it, and we have seen that despite demonetization, we are seeing that influx of capital. Amit may or may not agree, but at the same time, we have a capital chasing. And even the allocation of the global funds on the India front has been increasing, right? Whether on the industrial side, infrastructure side, real estate side, across various businesses. So therefore, the changes has to be, I would say, fundamental, radical, at speed, stability, consistency. All these things, if it happens, then Anuj, I think nobody can stop India to be a superpower. That's what I see, because still we are in a what you call it as a strong consumption-driven market for the next, I would say, another 1 or 2 decades. That's what I could see.
Beautifully said, Jayesh. You know that there is big opportunity, big potential. Certainly, real estate augurs very well for being able to lift the overall GDP of the country. There are certain matters, as you rightly pointed out, you know, whether it is the laws or it is some of the bureaucracy that needs to be unshackled and bring in a CEO culture to be able to drive the overall economy. Saket, I'm going to come to you on and then close 2 points. One, what Shweta asked, which was, I'll repeat for you. Why do developers hold inventory? Why don't they sell quickly? Why is the unsold inventory so large? That's first. And the second, I want to close with you, Saket. You're the Gen X on the screen. What are your aspirations from the Indian real estate?
To Anuj, to answer your first question, see, holding inventory is a very subjective thing for a developer. It depends on a lot of things, such as at what cost was the land acquired, or secondly, there are things and aspects such as life cycle of the project. When you launch a project, you sell at a certain rate, you sell to a certain buyer, certain number of buyers at a rate, and then when you reduce the price and sell, then opens a Pandora box for the other buyers to come in and tell us that you have discounted your prices. So they also want the same discount. They also want the same prices. So this sometimes becomes an issue for us to slash our prices very highly. And secondly, there is a factor of an emotion or a sentiment playing in the back of the mind of a developer, that if I slash my prices, I would be seen or perceived by a buyer as a distressed sale. So that might hamper my brand or my image in the market. So there are different factors at play. But that being said, it is always prudent and practical to reduce our prices and sell, rather than pay that EMI or pay that interest to the bank. Because ultimately, if you are selling by your ego, if you are not reducing your prices, and then you're basically working for the banks. So it always makes, as Shweta ji pointed out correctly, it makes much more sense to reduce the prices and sell in most of the situations. And
So just on that one, Shweta, I can tell you is, his dad is the one who holds the inventory. I know his dad extremely well. His dad is the one who holds the inventory. He is the greatest seller of all times of Calcutta. And by the way, he doesn't even need Anarock's assistance. He is the greatest seller of all times. So it is. I wish his dad is in the room and he can hear what Shweta's question is, because he's going to exactly say that to his dad.
No, then
So,
I think the idea here is to give the baton to the Gen X. Then I think that's the answer to my question.
yes.
thank you so much, Anuj ji. You're being very kind. Thank you so much.
And so Saket, your aspiration as Gen X.
Uh, Actually, sir, my expectations have been met up substantially by the present government, because the ATIB benefit that we as developers are availing now, it is really a boon for us developers to develop that affordable segment properly, and it is giving us a big incentive to go into that affordable housing segment and do some great work, do some good volumes. Secondly, even the interest subsidy that is being continued by the present government is empowering the purchasing power of our buyers and our affordable segment customers to actually come in and purchase their dream home. Also, the interest rates are at an all-time low, as pointed out by the esteemed panel, and that is also a big impetus for the buyers to come in and buy their dream home. So these are a few things, a few great points that the government has covered and is continuing to bless us with, and we are continuing to take advantage of this. Uh, but one thing that I would request the present government or the finance department or the housing ministry, that this input credit that has been taken away from us as affordable segment developers, as premium housing developers, it is really something that we would ideally like to come back, so that we can get that input price benefit and pass on that benefit to the prospective buyers, which in turn makes their homes much more cheaper. So this is one request, one wish that I have, that if it can come back.
Super. This has been fantastic. I've thoroughly enjoyed it. Lots of great discussions. I mean, future looks very bright. Starting what Ambar said is that the offices are not going to be out of fashion. I think if for the time being, the demand may be a little bit of at a pause, but equity hopefully will come back into the real estate segment. Shweta said a beautiful thing is that FDI should be here. There is reverse migration, guys. Don't forget tier 2, tier 3 cities. They hold a huge amount of potential for India. Amit, fantastic to see the way that you categorized the comeback for the developers. And for the NBFCs, and you're absolutely spot on both of those categories. There will be select NBFCs and developers who are going to come back. Not everybody is going to come back on this occasion, unlike what happened in 2009. When the wave came back, all the fishes which were on the shore went back into the ocean. I think this time, not all fishes are going to go back into the ocean. There will be many who will be left on the shores. Jayesh, a good overall view. Big opportunity for the real estate sector. Big potential, can perhaps cross the contribution to the GDP than what agriculture contributes. But there are some challenges, some laws that need to be changed, some mindset thinking that needs to be changed. And Jayesh, I completely agree with you. Contrary to what people think that there is not enough capital, there is enough capital for good quality players, for good quality stakeholders. And Saket, thanks for clarifying that you guys don't hold inventory, and also the reason why at times it becomes difficult to cut the prices to move the inventory. And good to know that from Gen X perspective, you guys seem to be largely satisfied, barring the input, credit that I'm sure Shalini will be picking it up within her framework. With that, Sapna, I'm going to hand it back to you.
Well, I must say the whole panel has been very positive on budget, but we do have some questions which present some apprehensions. We say the budget has focused on infra and SME from the point of view of creation of jobs, but is it a missed opportunity by not focusing on real estate, because it is another major segment that creates jobs and has multiplier effect? Mr. Puri, your call. Who should be the speaker taking the question?
I think Amit and Jayesh are good at it.
No, I would say that, because if you look at what they have done to the REIT in the budget, the FPI was allowed to invest in the debt of the REIT and the InvIT. So that is a very supporting provision for the real estate sector. They have extended the benefit to the affordable housing projects, ATIB, for 1 more year. They have extended the benefit of 1,50,000 additional benefit to the home buyer. And they have also, they are trying to lay a roadmap for the rental housing, which is the need of the hour, because if you look at cities, we don't have affordable rental housing for the blue collar workers. And for that, if there is a roadmap and in the process of disinvestment, if there is some land allocated for that particular purpose, I think we have, and with the best of the infrastructure focus, with InvIT for raising money. I think the real estate cannot be looked at in isolation. It has to be looked from the whole perspective. And only one thing on the demand side, as an industry, we wanted some more what was taken away from the buyer in 2017, which was a negative arbitrage, where I could buy 2 or 3 houses because I am paying 8% or 7% interest, and my rental yield is 2%. And if I am incurring a loss that should have been allowed, which was taken away in 2017, which exists in all developed markets, I think that is what we were hoping for in this. We need nothing else from the, and I think what Mohta has said, Saket has very clearly mentioned, input tax credit, because steel and cement prices have gone up and they are further impacting the cost of construction. I think barring those things, which I am sure we'll request Shweta, Shalini to address it probably in the next budget or in between.
Okay, one last question because we are running out of time is about affordable housing. That yes, there have been extensions of tax holiday and incentives, but the industry status to affordable housing has not translated into benefits. Still, there is a problem getting money from banks and all. So, is this going to create a gap in achieving housing for all, Mr. Puri?
Jayesh?
See, I think somewhere I believe that the changes which are being brought are again in a patch manner. And if the government really believes that affordable housing is one of the, I would say, the strong driver for the growth of the economy, and also that the sector supports 300 plus, I would say, the industries around the affordable housing or whatever housing, then I think the government should have a long-term view on this to say that this is the overall requirement. Keep in mind, as Amit said, there is going to be a all infrastructure development, and as Shalini mentioned about the Amrut Yojana, and then the what we call it as Make in India, and empowering the tier 2 and tier 3 and tier 4 cities, and where I would say the magic is going to happen from there. And if we really have to look at from that point of view, then I think affordable is a long-term story and is not a short-term story. So therefore, by extending by one year is something throwing what call it as a small piece of meat in front of a lion. And I can tell you that developers are lions, and really they have proved that over and again. If you look at the cycle since 1960s. So therefore, our government is that don't give, I would say, the small pieces. Just think from a long-term view as affordable housing, and really create the robust policies, the tax incentives, and also I would say all around I would say the policy changes, including the approval process, because this is the I would say the one of the fundamental driver for the growth of the Indian economy, because affordable housing is not what we call the tier 1 or tier 2 cities, but it's a across India story. So it can completely change the, I would say, the demographics of India when it comes to the real estate sector. And even I think it can feed into more than, as I said, the 300 sectors. So therefore, these small changes are not going to happen. Is not going to help. So therefore, it has to have a long-term. The government should have a long-term view on the affordable housing.
Thank you. Fantastic. Yeah, fantastic. Mr. Puri, thank you so much for wonderful moderation of the panel, getting the best views from our speakers, the eminent speakers here. Mr. Amit, thank you so much. Mr. Ambar, Maheshwari, thank you so much for being here with us. Ms. Shweta, Shalini, presenting the government's viewpoint and thought process in this panel. Jayesh, again, thank you so much for being here. Saket, for presenting the developer's point of view and what are their pain points, very well put across. I think, whoever are hearing us, they will take cognizant of those points. So thank you so much to the entire panel for being here, discussing the points. I have so many questions right here in front of me, but we will probably take it offline. Thank you so much.
Thank you very much. Thanks.
Thank
Thank you very much.
Thank you, everyone.